take advantage of the bullishness. Thanks for joining me on the CommStock channel. I'm Senior Analyst Brian Grete. Big news out of Washington and Beijing in that the U.S. and Chinese trade negotiators came to a framework deal over the weekend. So that will eliminate the threat of the 100% tariffs that President Trump had on China. It will roll back China's restrictions on rare earth exports. And most importantly for agriculture, it will include some ag purchases, especially soybeans by the sound of it. And so soybeans look like they will be the big winner in this. But we will also probably see China make some purchases of U.S. sorghum and probably some cotton as well. And maybe some other commodities that we don't know about yet. Corn and wheat are possibilities, I guess. Those are probably longer shots as we look at this, just the initial framework of this deal, and potentially may include some meat purchases as well. We will have to see when all the details are said and done and finalized. Assume that they do get finalized, and President Trump is expected to meet with Chinese leader Xi Jinping on Thursday in South Korea, and that's where the deal will get done. Assuming we don't have any hiccups from now until that time, and everything goes smoothly during the meeting between Trump and Xi. And so there are still some unknowns, obviously, whether the deal will actually get done, and more importantly, assuming that it does get done, what the details will be and what level of purchases there will be. I want to take a look initially here at how the trade war from the first presidency of Donald Trump happened, and then kind of some comparisons to where we stand right now. So as you can see, U.S. soybean exports to China dropped dramatically in 2018 during Trump's first presidency when he had the trade war with China. They started to pick up in 2019 and then really exploded in 2020 when the Phase 1 agreement came into effect. But you can see they backed off thereafter. China wasn't held to anything within the Phase 1 agreement. So they made the initial purchases and then they kind of started to phase out a little bit. And it went back to China buying what China needed, not China buying what was agreed to. And so as we look at 2025 here, this data is through the first 7 months of the year, January through July. But all those soybean exports to China came in the first 5 months of the year. So through May, there hasn't been anything shipped to China since that point in time. And so that's going to be we're probably going to see a similar jump. Now, keep in mind, we don't know the time frame on when this will happen and everything with the new deal. And so it may be 2026. That 2025 bar may be that really small one that's on the screen right now. And then 2026 takes a jump similar to what 2019 did. And then maybe into 2027, similar to 2020. And so we have to see how this all plays out. But we should see a rather substantial jump in soybean exports based on what U.S. trade negotiators are saying was agreed to over the weekend with the Chinese trade team. When you look at it from a marketing year standpoint, so this data is as of September 18th, which is the last data that's officially available because of the government shutdown. And so we have to go on just what we know. And we pretty darn certain that nothing was sold to China after September 18th during the shutdown period, but there's no way of knowing for certain until we get that back data from USDA once the government reopens it. So that could be some time yet. So as you can see here, there were no new crop soybean bookings on the books as of September 18th, well behind the previous 5 years and obviously the 5-year average there. But it didn't just stop with soybeans. When we take a look at the sorghum, corn, wheat, all those added together along with soybeans, the grand total was still zero. And so those numbers there for the previous marketing years represent all four of those commodities combined for purchases from China for the new crop marketing year. And as you can see, it's zero against some pretty hefty numbers, especially if you go back into that 2021, 22 timeframe, 2020, 2021 timeframe. Now, remember, that's the Phase 1 agreement still in effect at that point in time. And so China was making some of those purchases because of that deal. And so we'll have to see what the details of the new deal are. We don't even know what the name of it's going to be. Maybe it will be Phase 2 or something along those lines. And that doesn't really matter. The details of it are what matter. China also hasn't purchased much cotton. It has purchased a little bit of new crop cotton for the 25-26 marketing year, but not nearly what it had in previous years, as you can see here. So that 5-year average is well above the minuscule purchases that China did have on the books. But unlike soybeans, corn, wheat, and sorghum, China did book a little bit of U.S. cotton. And so that is, I think, another one of the commodities that we could see China come back into and make purchases of. Once again, the devil is in the details, so to speak, because this will all come down to what's in the details. And if you look back to the phase one agreement, there were a lot of loopholes in that. So while the United States scored a victory by having China ramp up its purchases back then, there were loopholes that China was able to garner and take advantage of as that deal went on. And that's why you saw some of those purchases fade away in the following years. 2020, 2021 marketing year being the high point and then dropping off thereafter. A lot of questions, like I said, on the details within this trade deal, but also a lot of questions. We know that China has a lot of South American soybeans on the books for fall delivery. So through the remainder of October, November, and December, Brazilian supplies were actively booked during the trade issues and skirmish with the United States. And then Argentina briefly cut its ag export tax for 48-hour period, and they got $7 billion of purchases registered there. And a lot of those were soybeans, and a lot of them were purchased by China. And so that was probably enough between the Brazilian supplies that they had booked for fall delivery and then those Argentine shipments to get them covered through the end of the year. They also have Brazilian new crop supplies booked starting in that February-March timeframe. And so we're now looking at a situation where maybe a very small window, January into early February timeframe, for the U.S. to make some soybean sales to Brazil, unless the details in this say that they're going to start making purchases right away. And if that's the case, then we could see some washout of Brazilian supplies. Now, keep in mind, they booked the Brazilian supplies at premiums to U.S. prices, but they did so to cover their bases so that they could have a supply if the trade war with the United States extended past the prime U.S. shipping season, which runs generally into early in the new year, so that January, February timeframe in 2026 in this case. So we'll have to see what the Chinese buyers do with those Brazilian bookings. So right now, the soybean market is taking this bullishly, as they should. If we got bullish news on the trade front with China and the market didn't react in a strong fashion, we were in all kinds of trouble. But here you'll see that the soybean market has exploded to the upside and trading near its highest levels of the 2025 calendar year. We will face tough resistance on the continuation chart about 1075 or so. If it can blow above that, then you're talking about $11 to the upside. And then you start to incrementally phase in the resistance about every 20-25 cents higher above that. And so I think that those are the next key critical levels on the chart, this continuation chart that we must face here. 1075, $11, and then you're talking 1120, 1125. And then 1150-ish area and that type of thing. But keep in mind, if the details of this agreement aren't as bullish as what the market is reacting to here in the initial trading day after it was announced, then you could see the market pull back. So I think that this one's a critical one to watch how the soybean market reacts, one, and two, to be prepared with your sales levels. And so you should have sales orders in place, target prices in place, and if they're hit, then you're going to move more soybean supplies for the 2025 crop. And you probably need to be moving 2026 crop at the same time, just because you don't know how this is all going to play out. It could be bullish for a long period of time, and it may not be. That's where the details will come into play. Did China agree to X number of purchases by X date at X price, so on and so forth? If they're dollar amounts, then they can make the purchases. And that's kind of what happened in phase one. They agreed to purchase a certain dollar level, and they got to that level, and then it was a need basis from their perspective. If they needed the soybeans, they'd come and get them from the United States. If they didn't need them, they would go to other sources, primarily Brazil. So that's all part of it. And also, China has shown with soybeans and other commodities that it wants to diversify its portfolio, so to speak. And so it wants to spread out. Now, with that being the case, that may actually play into the U.S. favor because Brazil had started to account for about 3/4 of all Chinese soybean imports. And so that was even starting to lean heavier in that direction with the absence of U.S. purchases here the second half of this 2025 year. And so some diversification could actually bring more purchases of U.S. soybeans back into the fold. So still a lot of unknowns on this one. It's bullish, no doubt about it. Take advantage of the bullishness so that you can make some sales on this rally. For the CommStock channel, I'm analyst Brian Grete.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.